Hello, ladies and gentlemen. A very warm welcome to you on this excellent Thursday morning, which also happens to be the last working day of June's fabulous FNO expiry. I'll request the PCI to kindly fire the long term chart of the Nifty. For the fourth month in a row, this index has closed in positive territory, and that's despite two major wars, one between Iran and Israel in the month of June, as also Iran and US just last week. And of course, in the month of May, you had this massive blow up between India and Pakistan over Pahalgam. So, these two wars in the last 2 months, as also tariff tantrums, tariff wars, trade wars across the world, all this put together could not prevent the Nifty from rising 12.5% from its most recent low of 21,740, which it hit in early April. So a one-sided movement, about 15% over the last 3 months. Yes, there were a bit of corrections, but we start July and the first quarter earnings on a very firm footing at about 25,350. The Nifty is at its highest since 3rd October 2024. So not only are we at a fresh high for 2025, but we are also at an 8-month high on the index. We are just about 800 points shy of an all-time high, and rising SIPs, decent rate cuts by the Reserve Bank of India, unbridled optimism is propelling not only the Nifty, also the Bank Nifty to fresh highs. So this is the state of play as far as markets are concerned. And of course, lots of winners coming in the month of in the month of June. Let me just go through the data that we have prepared for you, and you will see MCX rising very sharply in the month of June. About a 30-35% uptick. 30% uptick is what MCX has seen at a record high as far as markets are concerned in the month of June. Other gainers include Swiggy. This is the platform where you order food and it gets delivered to your home. It's appreciated 23% in the month of June. From the NBFC space, you have three very big winners: JM Financial, Aditya Birla Capital, and of course L&T Finance. Aditya Birla Capital and L&T Finance are at record highs. What we will do, ladies and gentlemen, is get a conversation going with Mr. Ashish Chaturmohta, Managing Director for the PMS business at JM Financials. Namaste Ashish ji, and a very warm welcome to you. Great to have you on the last day of June, which is turning out to be excellent for bulls as also for long-term investors. How far are we away from a record high on the Nifty? What is your view, and how is your portfolio structured towards that end?
Thanks, Shalji, for having me on this show. So just to give you a perspective, as far as broader markets are concerned, despite so much geopolitical tensions, if you look at whether it's India, Pakistan, Iran, Israel, and the kind of volatility crude stated in the last couple of weeks, one thing was very clear: we didn't see a very significant jump in the volatility index, whether it's the India VIX or the implied volatility of options or the global index of volatility, which is CBOE. We have not seen significant jump in this volatility index. Second part is, despite so much kind of uncertainty or geopolitical risk, we didn't see a significant amount of money going back to US, and it got reflected in the form of the dollar index. So dollar index didn't saw a very strong rally, clearly indicating that the move towards safe haven was not very sharp in nature, and all this got reflected into the price behavior of our market, which continuously sustained above its 200-day moving average and was making a higher top, higher bottom formation. Now coming to the domestic cues, if you look at what RBI has done in terms of CRR cut, in terms of repo rate cut, in terms of reducing risk weight, all this has positively supported market. Our belief is it's not just about the previous all-time high which the market is going to witness, which is close to 26,000. We believe, the kind of structuring which market is showing, it looks like we are headed towards 27,000, 27,500 kind of trajectory in coming few months.
Okay. With this background in mind, let's just stick to 27,000 for the moment. We have a very strong move coming into Reliance, as also HDFC Bank is knocking heaven's door at 2,000 rupees. Firstly, Ashiji, I'm presuming both of them are part of your portfolio, and both of them are at very high weightages on the Nifty. Apart from these two, what are the 2 or 3 stocks that you think will propel Nifty to 27,000?
Yes, so definitely, as you rightly mentioned, private banks are showing very strong show, and particularly HDFC Bank, because this is quoting at around 2.2 times price to book on a forward basis. If you look at the 3-year, 5-year averages, it is at good discount to this 5-year average multiples. We are seeing the overall systemic loan growth growing at almost 16%. And with this CRR cut and the repo rate cut, obviously in the 1 or 2 quarters we might see some dent in the NIMs, but it is very positive for the overall credit growth environment. So it's not just HDFC Bank which is going to be a big beneficiary, but also I believe stocks like ICICI Bank, Axis would be key beneficiary of this trend. And apart from that, if you see if the GSEC yields or yield comes down, then eventually it is going to positively impact PSU banks in their M2M treasury gains. So we believe that even PSU banks will start showing very good strength. And if the good part is a lot of these PSU banks have seen a good 15-16% kind of loan growth. So overall the loan growth momentum is strong, plus there's going to be a good treasury gains because of falling interest rates. So all this with a reasonable valuation of 1 time price to book or below 1 time price to book for some of the PSU banks would be the good reason for these PSU banks to get re-rated. Second, we believe NBFC could be in a very strong trend. So we are seeing good strength coming from Bajaj Twins, Cholamandalam, Shriram. These are the names which will continue to show very strong move in days to come. And thematic theme, if we believe, then it's capital markets, which is doing extraordinarily well, and we have seen what is happening to MCX. So MCX will continue to do well because of the options which is coming into gold and silver, plus electricity derivatives, and the very strong volatility in the entire commodities will lead to strong volume growth. So all this is very positive for MCX. So MCX would be a good key candidate in the capital markets theme. Now, we have been talking about wealth management outfits, and within that Nuvama was our topic for last 1 year, and we continue to hold this stock, and we believe that structurally this is going to be in a very, very strong trajectory.
Okay, so Bajaj Twins, Cholamandalam Finance, Shriram Finance from the NBFC stable, as also MCX, Nuvama from wealth management, and of course PSU banks, as well as in terms of re-rating. Ashiji, let me just drill this further and take individual recommendations from you. Within the PSU basket, what looks good to you? PSU banking basket, and of course when you refer to NBFCs, 2 small ones, which is Aditya Birla Capital and L&T Finance, are making fresh record highs. Are they by any chance a part of your portfolio?
So the Aditya Birla Capital we like as a stock, and we have been tracking it very closely, although not part of the portfolio, but we positively look this stock. The reason being there is a good shift from wholesale to retail lending, which is overall increasing the the profitability and the return ratios. So we believe that, and with a very strong parentage, with strong shift in the business, we believe Aditya Birla Capital could be one stock which is a very good candidate in the entire NBFC space. So yes, this is one stock we continue to like it, and we hold it on a positive tracking list. As far as you mentioned about some of the other PSU banks, so we are playing this entire PSU bank play through 2 things. One, the large cap PSU bank, which is State Bank of India, which is doing extremely well. I would say that in terms of the loan growth, in terms of the overall quality of business, it is comparable to what any good private sector bank will do, and that's the reason we believe that SBI could be a very, very strong candidate for re-rating in the PSU banking basket. Apart from that, we try to take the exposure on the PSU bank through ETF. So PSU Bank, this ETF is something which we have an exposure rather than individual names on the small and mid cap PSU banks.
Okay, fair point. CPSE ETF, sorry, Nippon, Nippon PSU Bank ETF is something that you've recommend for the last 5 years, 6 years, and a lot of people have made a lot of money on that. Ashish ji, let's just drill down into the PMS portfolio of JM Financial, which you've managed so well. What are the top 5 stocks in terms of weightage, and what are the top 5 mid caps that you have in terms of top performers?
Yes. So, as far as large cap is concerned, we have broadly discussed with HDFC Bank, ICICI Bank, Chola, Bajaj, Shriram. These are the names we continue to hold. Apart from that, if you look at Indigo is our one of the our top bet position which we have been holding, and we continue to like the stock because of a very strong, I would say, market share gain which Indigo has done. And if you look at the overall low cost carriers, they have gained very strong market share. So from 48% now, the overall weight of low cost carriers in the entire in the entire business is close to 68% in the domestic travel, and where Indigo has got very strong presence, and that's the reason there is a strong market share gain which Indigo has been consistently gaining. We are seeing the number of airports also going to increase, so this is going to improve the overall air passenger traffic. So we believe that 8 to 9% is going to be a kind of air passenger traffic growth in the medium term, and this will eventually benefit company like Indigo in the medium to long term. If you look at the capital markets theme, MCX is our top position, which we have already discussed, and we continue to hold this stock. Nuama, which is the asset wealth management outfit, again it's one of the top position. If you look at apart from this, we were holding stocks in the defense space. So stocks like Solar Industries, GRSC, these are the names which we hold, and we believe structurally these are the names which will continue to do well because of a very strong order book and a good revenue visibility which is going to be seen in the next 4 to 5 year time frame. Also in the hospitality segment, ITC hotels is something, Shalji, we continue to like it
Yes.
because they are adding a lot of new rooms, and in 90% of the incremental capacity they are going to do through asset light business model. Because of this, the overall margins, operating margins, are going to improve by 400 to 450 basis point. And if you look at ITC hotel, it is trading at discount to Indian hotels. So I think this valuation gap will get re-rated, and ITC hotels can do very well in the medium to long term.
Okay, wonderful. So, ladies and gentlemen, in terms of mids and smalls, it's MCX, Nuvama, Garden Reach, Solar Industries, and of course ITC hotels, which are the top bets at JM Financial PMS. And amongst the large caps, of course, HDFC and ICICI banks, Chola Finance, Bajaj Finance, and Shriram. When we look at the broader markets, Ashish ji, we have first quarter earnings now a fortnight away. We are sitting on 26th of June, and by 7th of July we'll have a lot of data coming in. What are your expectations from first quarter earnings as far as corporate India is concerned, and where do you think the maximum money will be made?
Sure. So as we believe that the momentum of earnings will typically come from the mid and small cap space, where we have already seen strong growth momentum. If you look at the overall, if you look at even the last 4 quarters, if you exclude Nifty 50, then there is a good growth of 8 to 9%. So we believe there is a lot of growth which is coming from the Nifty next 50, or maybe the broader small and mid cap space, and we continue to believe so that this is the space which is going to provide good earnings visibility in the sector. If you look at, I think it's going to be the capital market theme. If you look at the entire capex and manufacturing theme, again because of the strong focus on the entire manufacturing as a sector, we are going to see strong revenue visibility coming in this space. And within the subsector, if I look into the capex and manufacturing, first would be defense, because there the revenue visibility is going to be very strong. 5 to 7 times kind of order book to bill ratio is there. Margins are improving because of indigenization. So I think the earning growth momentum is going to be great in that space. And then selectively there are names like Lloyd Metals, which has got an approval of the EC for the iron ore mines. So they were doing almost 10 million ton. Now they are going to do 26 million ton. So there is going to be a strong earnings visibility for a company like Lloyd Metals. APL Apollo is something which we like within the structural steel tubes, which has got almost 55% market share in the overall segment, and the second best player would be hardly 10-12% in terms of market size. So I think, and with a lot of value addition which this company is putting in, I think these are the companies which are going to post very strong set of numbers.
Okay. Ashish, you've mentioned Garden Reach amongst your top picks. This is, of course, a shipbuilder that's been the top performer. The year-to-date gain on Garden Reach, I think, should exceed 70%, if I'm not wrong. Apart from Garden Reach, are there any other defense counters that are a part of your PMS portfolio?
Yes, so I think, as I mentioned, there are some small and mid cap opportunities which we have tried to identify within the defense space. So one such company is Apollo Microsystems, which is getting a lot of order book, and I think this is one stock which we would like to play on the entire torpedo segment. And then apart from that, there's a company called PTC Industries, which is into titanium, and I think they are getting very strong kind of traction from global MNC companies like Saffron and all. So I think these are the companies where we think that the revenue visibility and the earning growth momentum can be strong. Although because both these stocks form part of small and mid cap space, we try to reduce our overall allocation into this. But yes, in the defense space, these are the news which we have as in terms of our holdings. It's PTC,
So, four
PTC
names.
Industries Limited.
Uh, uh, yes, PTC Industries is for the moment at about 14,835. The all-time high was 17,858, which was last seen on January of 2025. So, four stocks, ladies and gentlemen: PTC Industries, Apollo Microsystems, Garden Reach, and of course, how could we forget Solar Industries? That's also a very strong defense play. So, Ashiji, my compliments for one reason. MCX, the top performer, 30% up alone in month of June. Look at Solar Industries. The complexion on the stock has changed. I think the stock should have given anywhere between 40-45% return year to date as far as gainers are concerned. And of course, there is no stopping Garden Reach. So fabulous, fabulous stock picking, and more so because your conviction continues and you continue to hold them even at such lofty gains and at such valuations. Now, where is fresh money going? Is it going only in these stocks? What is the total stock number that you have in your PMS?
So currently, Shalji, if I remember it correctly, I think it's around 35-36 names which we are holding. Within that, we have a subdivision where we do typically 55 to 60% allocation to the NSE top 200 names, and the balance we try to allocate into the small and mid cap or stocks beyond top 200 names. So this is a broader allocation which we keep in mind. And currently we have around 36 stocks in our portfolio. The good part is, defense. We had taken an exposure almost in the month of March. So, at a right time, we were able to get into these stocks. So they have really given us good return. And the strategy, we call it as FTPM, which is a combination of fundamental technicals, market dynamics, and psychology. So now technicals is helping us to ride the trend so that, and we have also certain kind of stop loss which we have in our mind. So at a right time, if there is any kind of weakness, we will not hesitate to cut our positions also.
Okay, so that's the overall structure, ladies and gentlemen. And one very quick question, Ashishji, what's the AUM size?
So closely the strategy which comes under the part of Apex PMS, which is the discretionary and the non-discretionary portfolio, it's close to 750 crores. But overall, what we are managing under the JM's umbrella, it's close to 2500 crores.
So 2500 crore rupees is spread over 35-36 stocks. Is that
No,
right?
so there are different schemes all put together, but yeah, this particular scheme, it's close to 750 crores.
Okay. Ashish ji, what is your view when it comes to the IT space? The first set of companies to declare earnings in early July will be Infosys and TCS. Is there any hope left? Should people withdraw money from these two and maybe shift to some other counters?
So we are not very constructive about IT as a space, Shelji. The reason being, with the kind of global uncertainty, geopolitical risk, and not sure about what kind of global growth we are going to witness, we believe the discretionary IT spending will be under question mark. And when these kind of trend emerges, you don't see meaningful upgrades coming into at least the large cap IT names. So we are not very hopeful. If we want to really take exposure in the IT space, it would be restricted to some of the mid cap companies where at least we are seeing some amount of reasonable amount of constant currency growth. If you look at the BFSI space, that's doing reasonably good. So there are certain plays which are good proxy to this particular sub segment. And then cloud transformation is something which is a good theme. So keeping this in mind, Oracle Finance is one stock which looks promising within the IT space, but we are very underweight in this space, at least at this point of time.
Which one? I'm sorry, I missed the name.
Oracle Finance is something which we are holding, but otherwise we are underweight in the overall IT
Okay.
space.
Yes. So Oracle Financial Services, yes, the parent declared a very strong set of earnings about a month ago in the US, and the stock, of course, has done very well in the Indian markets too. Uh, Ashish ji, what else are you not touching at all?
So, Shelji, if you look at there are many sectors actually, honestly speaking, like commodities, except for one or two names where we believe they have good, captive mines, and there's a lot of forward integration which can be done. But other than that, we are not very positive about the entire metals and mining space. Second is oil marketing companies, or the upstream or the downstream companies. We don't have any exposure at this point of time. Then there is media, there is the healthcare. In the healthcare, we are having exposure to just one name in the entire hospital sector. But otherwise, if you look at the broader diagnostic space, is something which we have completely avoided in this space. FMCG is something which is underweight at this point of time. So we are very selective in the entire consumption driven theme. So they are very selective name. But if you look at the overall position in the consumption or the FMCG, it's underweight at this point of time.
Okay, so FMCG is not something that you like. Within the pharma sector, there has been a lot of gains coming in the form of Glenmark record high. The counter's done extremely well in the month of June. What are your big bets that you've taken in the pharma space?
So we are constructive about the CDMO space because we believe this is a space which is going to grow double the size of what a normal business in the pharma is going to do. So we expect 16-17% kind of growth in the entire CDMO as an opportunity. And within that, there are names like Laurus Labs, which looks promising to us because the company has done huge amount of capex in the last couple of years, and now we are seeing some very strong growth momentum coming in the earnings of the CDMO space within the overall within the overall top line which the company is witnessing. And we believe this could be one space which would surprise us in terms of earning growth. If you look at from a technical perspective, also Laurus Lab has consolidated for good 3-4 years, and this is a 3-4 year kind of consolidation breakout which is happening. So it also indicates market is also trying to give reasonable amount of weight to the company. Then in the large cap, Divi's Lab is one stock we have been holding for a very long time, and we continue to believe Divi's Lab will continue to have its edge in the entire niche API segment. So these are the names which we are holding in the pharma space. Otherwise, we are also a little underweight in the pharma, except these two opportunities. And in the healthcare, as I mentioned, one of the hospital stock we are holding in our portfolios.
Okay. So Laurus and Oracle Financial Services, are represented by the pharma and the IT sector. One final question, Ashish ji. Now, what is the portfolio strategy? Is this a buy and hold market when we wait for 27,000, 28,000 on the Nifty? Or is this a trending or a trading? Is it a trending and a trading market? How are you mentally, agile at this point of time? You want to buy and hold, or you want to trade and trend?
So whenever there is an opportunity to make make a good gains in a shorter period of time, we don't hesitate to book the gains also, Shelji. But as you know, in when the trends get established and there are no signs of reversal, then sometime booking profit at an early stage also creates a lot of challenges. So this is the reason where we try to take a lot of help from the charts, from the technical setups, and if the trends are in a good shape, then we don't hurry to just book the gains. But yes, at a right time, whenever we feel that it's fizzling out, or maybe it's entering into a consolidation phase and it will take another 6 months or 8 months to again see a good recovery, then it is better to book some profits and switch to a better opportunity.
Okay, with that, Ashish ji, we'll call it a day. What a pleasure. And again, congratulations on Garden Reach, MCX, Solar Industries, just to name a couple of stocks that have done phenomenally well. Not many people will remember the great call on Shriram Finance. I think it was on 1800 rupees. It went on to give 5-for-1 split, and now is doing extremely well. And who can forget the PSU banking ETF? I think 18 rupees is what we got into. Let me just check what the price is. I haven't for a while. The Nippon PSU Bs, it was called PSU banking Bs. 1 second, it'll just come right there in front of me. Okay, bad day, 77 rupees, ladies and gentlemen. This is a time when I think 4-5 years ago, we got it at 18, 19 rupees, if I'm not wrong. With that, ladies and gentlemen, we'll call it a day and thank Ashish Chaturmohta ji for his excellent, very lucid explanation on what to buy and what to hold. This is how we make money in the long term as well as in the short term. Have a nice day, Ashish ji, and we look forward to the next conversation with you. Yeah. With this, ladies and gentlemen, we'll call it a day. Ashish manages about 750 crores in one single PMS scheme, which is full of about 35 stocks. Top holdings are in the large cap space: HDFC Bank and ICICI Bank, Bajaj Finance, Reliance and Shriram Finance. Top mid caps are MCX, Solar Industries, Garden Reach, Nuvama and ITC Hotels. Apart from that, there is Laurus Labs from the pharma space, and of course Oracle Financial Services from the IT space. Other defense counters are PTC Industries, Apollo Microsystems, and of course Solar Industries, apart from Garden Reach. I hope you enjoy the conversation. Stay tuned to Business Today Television. There's a lot that's happening on the other side.